It's either yes, I'm taking a trade, or no. There's no in between. That gets rid of guessing about your entries and exits. I don't use confluences or indicators. I just take my trade as it is. How's the GT3? Ridiculous. Best car ever driven. Are all these funded? Yes, they're all funded. I only trade funded. I don't trade live accounts. I don't trade none of that. I trade funded accounts only.
What's up?
I only funded. I don't like trading live accounts. If I trade live accounts, I'm not gonna make as much as I could.
Where's my EMA at, bro?
Fuck. Talk what?
All right, peace, yo.
Do you rely more on order blocks, report resistance, or value gaps, supply and demand? No, I'm a breakout trader, brother. I mark my high, my lows, I break out. Pretty simple. Hey, have a good one, Carp. My enter off of a bearish CSID. What is it? Dog?
Do 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 do. All right, so for y'all wondering how we're doing on the P&L scale, here's how we're doing today. I'm up one trade, two trades with one account for some reason. One trade up on my PA. I took an L on the 15-minute and a W on the the regular 30-minute trade. And I'll show you guys what I was gonna say is this crazy candle with JP coming in and talking about some shit, and it literally shot up 40 points in under 10 seconds. Like no drawdown, like you could have passed any account. And I was in it, believe it or not, but my dumbass had an ATM order of fucking such a stupid thing. But it yeah, it didn't clearly it didn't work out. Well, no, sorry, it worked out, but it didn't work out as much as I thought it would have. Like I should have had no take profit, and I should have just trailed my stop or closed out when I freaking I was like, oh shit, came up. When I passed it, I should have done it on one account at least. Like I should have done that on one account. I should have passed another eval. So all my evals are looking about like I need about 1,500 more to pass all 5 of them. I got, after today, I have 4 days to do it, or 3 days, I guess, Monday, Tuesday, Wednesday, because I think it renews on Thursday. So I have 3 days, including this. So I guess like 4 days to pass these bitches, which is technically only 3 trades. And this is a tough one because like it's so extended up. I don't know how to trade this. But this technically should be easy money. Like, if I want it to go long or short, like each candle is at least moving. Like, you know, if I hit it right, it should be fine. It's just I don't know which direction to go. Just fine. You know, there's no rush. Just gotta wait for a confident thing to do. For example, if I wanted to gotta be able to read this fucking price action. Like this could pump up right here, right? Oh shoot. Buy market.
Order submitted.
Oof. That's a tough one. You gotta wait, Kyle. Like, you know, not the worst thing in the world, but chill. I may have made a mistake. That's crazy. Oh, that's so crazy. Oh my god, like what was I thinking? Oh god. That's a fat L. Motherfucker. Okay, so I'm not where I need to be then to pass these evals. Because I made a stupid trade. Yeah, don't do that again. Like, what was I thinking? What was I thinking? take breakouts, dude. You don't just fucking click blindly. No, this is fucking an L. Do we just, I gotta exit out, like, break even. Mm.
Target filled.
All right, well, was not a W, but it ended up being a W. But I got a little scared of that, to be honest with you.
Order filled.
That was weird. What's going on here?
Order filled.
Super weird. But yeah, let's get out of that trash. Hearn sent me a video.
Hey everybody, Brian Shannon here. Today is Thursday, the 11th of January. Let's talk a moment about where to set an anchor for our analysis. We're looking to start here with a 30-minute time frame of the S&P 500 futures, the ES. The E-mini began trading on Monday, the first day of the year. Equities, of course, only started trading on Tuesday. This is where the first bets on the S&P 500 were made. That is the anchor from the very first trade of the year. When we saw that happen, I was first using the Anchored View app from the beginning of the year on a 1-minute chart because you couldn't find value looking at a 30-minute time frame with only 2 minutes into the trading year. So as time progresses, I've moved over to a 30-minute time frame, and you can see the value of this year-to-date anchored volume-weighted average price. The sellers took control, and we saw a pattern of lower highs and lower lows, with that anchored volume-weighted average price providing resistance until last week where it popped up through that level. Now, looking at it, we've seen today we've pulled back all the way into that year-to-date Anchored View app, and the buyers were there to defend it. So what was once prior resistance now seems to have become support. So once this market started to rally like that, I figured, well, that is the lowest low. We had this high that took out that high. We had a higher low. So this was the low of the year so far, and still is. So I put an anchor on that. I want to see how the market responds to it. It doesn't mean I'm automatically going to buy pullbacks to that level, but it's, as I always say, a level of interest. And same is true, of course, for the year-to-date anchored volume-weighted average price. This green one I put on the chart on Sunday evening. the first trade of the week for the S&P futures. So Sunday evening, when the S&P 500 futures opened, the sellers were in control until they regained control for the week right here at this point. Now, the week had only just begun, of course, and the equities weren't even open yet. This is, just prior to the equities open on the New York Stock Exchange, 9:30 a.m. Eastern Time. What we have now is that's where that began, and we saw the pullback. I did not buy over in here. I mentioned on Twitter, here's the level of interest. I had purchased as the market rallied from that level. I didn't try to buy as it touched that level, because just like this time this morning, it might have sliced right through that. Instead, I look at it as a level of interest, and when it hits that level of interest, I could switch to a very short-term time frame to look for evidence that maybe I'm going to purchase it. Now, if you go back to the charts I had posted, I had also put a anchor at that point right here on that peak. Now, I had it colored red, so let's just change the color right here. And this is TradingView. They allow for futures charts, that is. We saw that the market rallied off of this anchor and straight up through that level. So this is where the new momentum campaign began. That's what I refer to as a handoff. The handoff of the momentum occurred back up into the upside here at this point, and then it held above that level on tests. Now, with that first and second day. Yesterday, we saw a powerful move beyond that range finally, and that's where the buyers regained control. I took this anchor off because this morning it was in the same place as the anchor from that low, and I wanted to keep my charts simple. So when do I take an anchor off? Well, once it gets in the way of your analysis or no longer has any value. So we came down to the year-to-date anchor, and what do I do there? Do I buy right at that level? You can look at it and say, well, you should have, and hindsight is always perfect to say that. Instead, what I do is I look at a very short-term time frame. I look at the 1-minute chart, and you can see it didn't actually touch right there. Instead, it bounced a little bit. I had made a purchase over here. I've sold most of it right now for two reasons. One, we're up against the anchor from that handoff point, that black one, and this is from the high that it's made here just yesterday, and that high yesterday is, of course, the high for the year. So right now, the purple is the year-to-date low point, and this is the year-to-date high point. I'm going to keep that on there as a level of reference to say, since that prior momentum campaign began right over here at that handoff, now we're up against that level. We have 3 days worth of people who purchased in this area who might be looking to break even. We have people from the absolute high who now it's getting up to that average point. I look at this and say, these two anchor points come together. Here's a potential level of supply. That's why I'm out of most of my long right now. I have a little bit in case we continue to rally up through there and just completely ignore. This is how positions reestablished down here.
believe that. Do some FX replay. Move these up so you can see. And I think I gotta take another trade in a bit here. Jokes. That's jokes. That's jokes. That's jokes. That's jokes. Looks like we're gonna have to enter another trade here. Five, four, three, two, one.
Order submitted.
Right highs here. This could be bad.
Order submitted.
I'm just gonna sit through it. I don't really care. It's the setup, so I don't care. Probably gonna pull back. We'll see what happens here.
Target filled.
W. This is annoying though. Oh shit. Okay, don't do that then. doesn't really matter as long as you just keep practicing, dude. If you can consistently do it, then you're kind of good. God damn. I was like so good way back. Way back when. Not loving it. So stressful. might continue to go. We'll see. We're in. Technically, I didn't actually put my order in, but see what happens. A bit scared right now. I'm not trading best. I'm back testing, so. It's weird. Like, I don't know how I was doing so well. It's like gross. I'm so ass. not as good as I was. Not as good as I once was. Fuck, it's so annoying. My God. It's like I forgot how to be profitable. Ugh, it's okay. I'm gonna take a break. What the fuck? Like, I don't get it. I was so good. It was so good. Okay, I'm gonna pause. Stop streaming.